Is China about to dominate the next era of technology and industry? And what does that mean for your money? Last time the world went through an economic shift like this one, it gave us companies like Sony, Nintendo, Toyota. This time, the stakes are bigger. And most people don't realize that it's actually happening. My name is Felix and I became financially independent before 30 through investing. No tips, no luck. A method. I've been in the stock market for over 15 years and my biggest lesson is that a lot of success comes from spotting the bigger patterns before everybody else does. Andre Jick made a great video on the macro theory behind the Trump-China summit. Make sure to watch it for that side of the story. I want to take a different angle. I want to show you what actually happens to specific sectors when a shift like this one plays out. First of all, there's a signal and it's shown up every single time major power has shifted from one nation to another. For 5 of the previous 6 months, the biggest export out of the US hasn't been oil, pharmaceuticals, or weapons. It's been gold, physical gold, leaving the country at a record pace. Nearly 18 billion in February alone. And there's a pattern in economics that's held pretty consistently. When gold flows out of a country, that country is usually losing dominance. And when gold flows in, that country is usually gaining it. When the British Empire declined, for example, gold left London for New York. America ended up with more than half of the world's gold. And that's literally why the dollar became the world reserve currency. That's probably an episode of its own, so don't forget to subscribe. Right now, gold is leaving New York and it's heading to China. And a few weeks ago, Trump left the US and flew with 17 of the US most powerful CEOs to Beijing. China. Musk, Cook, Huang, Larry Fink, $1 trillion of net worth on one plane. And here's what jumped out to me. The whole delegation was tech heavy, tech dominant. We had Nvidia, Qualcomm, Apple, Micron, Coherent, Illumina. That tells you what's actually being negotiated, not just tariffs. The entire economical and technical relationship between the two countries. And we've seen this setup before. A dominant economy under pressure and a rising power gaining ground. And gold moving from one to the other. And in between, a deal that forces both sides to reorganize. And last time it happened, it created some of the most iconic companies in history. I'll start with the examples that everyone can picture, and I'll keep it quick because the real story here is tech. After the Plaza Accord in 1985, the yen doubled against the dollar. Japanese exports got super expensive overnight. So Japanese automakers did something quite radical. They built factories inside of the US. Honda in Ohio, Toyota in Kentucky, and Nissan in Tennessee. The pressure didn't kill them, it forced them to level up. Toyota invented lean manufacturing. Honda created Acura, Toyota created Lexus. And in 15 years, Japan went to cheap imports to one of the most respected auto manufacturers in the world. Now watch what's happening in China. BYD sold 4.6 million vehicles last year. European sales tripled. They're opening factories in Hungary, Turkey, Spain, and they've already launched premium brands. Denza and Yangwang. Just like Toyota created Lexus once they had credibility. Same playbook, faster execution, and the auto comparison alone tells you that the pattern is real. But the real story is in technology. Because that's where Japan's shift produced the most dramatic results. And it's where China's shift is going even further. So most people know that Japan is making good cars. Very few people remember how Japan dominated tech in the 80s and 90s. Sony's Walkman had over half of the world's portable music player market. Japan exported more than 85% of the global's VCR market. Remember those? I do, but I'm a 90s man. Nintendo, that started as a playing card company in Kyoto. They launched the NES in 85 and single-handedly saved the entire American video games market after it crashed right before. Then came the PlayStation in 94 and that changed gaming forever. Last to be Nintendo. But the biggest one, and the one most relevant to what's happening now, semiconductors. In the 1980s, Japan made over 50% of the entire world's chips. The top 3 chip makers on Earth, NEC, Toshiba, Hitachi, they were all Japanese. And none of this is random. This is what's happening when a company is forced up in the value chain. Japan couldn't compete on cheap exports anymore, so it competed on technology instead. The pressure didn't weaken them, it turned them into the most valuable tech innovator in the entire world for 2 decades. Now look at what's happening in China and pay attention to the same dynamic. Pressure is creating innovation. Start with Huawei. In 2019, the US completely cut off Huawei. No Google services, no American chips, no access to advanced semiconductors. Most companies probably just would have folded. Huawei didn't fold. They built their own operating system from scratch, Harmony OS. They built their own chip, the Kirin series. And last year, they reclaimed the #1 smartphone position in China, shipping nearly 47 million units. And they did this while being sanctioned by the most powerful country in the world. Think about what that means. The sanctions, they were there to destroy Huawei. Instead, they forced Huawei to become fully self-sufficient. The same dynamic that turned Sony from a small radio company in the 1980s into a global empire. Pressure, creating innovation. And Huawei isn't alone. Look at Xiaomi in China. They hit the #1 market share in China in 2005. But here's what's interesting. That's not just a phone company anymore. They launched an electric car. They're building their own 3-nanometer chip. They have a smart home ecosystem that connects everything from air purifiers to security cameras. They're becoming what Sony was at its peak. A tech company that basically touches every point of your daily life. DJI already consumes around 70% of the global consumer drone market. That's the level of dominance that even Sony at its best couldn't reach in any single category. And then there's semiconductors, the biggest parallel of them all. Japan made over 50% of the entire world's chip market in the 80s. China is now the world's largest chip consumer, and it's building domestic production capacity at a pace that nobody can keep up with. The companies that are doing this, SMIC, CXMT, and Huahong, names most investors don't know yet, but NEC and Toshiba weren't names that people knew about in the 70s either. 10 years later, they made half of the world's chips. Now let's connect this back to who was on that plane, the delegation. Because let me tell you, it was loaded with chip executives. Jensen Huang, NVIDIA, literally flew to Alaska to board the Air Force One at one of its pit stops or fuel stops. That's how badly people wanted to be on board of this plane. And why was he so eager to get on the plane? Well, NVIDIA has billions in AI chip revenue locked behind US export controls on China. Qualcomm, that I mentioned a few minutes ago, they earn roughly half of their revenue from China. And Micron, well, they've been banned from Chinese infrastructure projects since 23. So these CEOs didn't fly to China for diplomacy. They flew because the chip embargo is getting renegotiated. And if even a partial thaw happens, the ripple effect through the entire semiconductor supply chain will be massive. And this is where it gets really, really interesting for investors, because when the chip trade shifts, the companies that move first aren't the ones designing chips. It's the ones making the equipment to manufacture them. ASML makes the lithography machines that every advanced chip maker on Earth depends on. Last year, China was 33% of their revenue. This year, dropped to 19% in a single quarter. Why? Tightening export controls. Applied Materials, the world's largest semiconductor equipment company, over 28 billion in revenue. They're projecting 600 to 700 million in lost China revenue in this fiscal year. These companies are priced for worst case scenario right now. The market is assuming that the restrictions are getting even tighter. But if that delegation signals a loosening, even a modest one, these stocks re-rate before anyone else. Why? Well, because the equipment orders, they occur years before the actual chip is delivered. The equipment makers are the leading indicator of the entire semiconductor cycle. And when Japan dominated the chip market in the 1980s, the smartest investors didn't just buy NEC and Toshiba. They bought the supply chain underneath, the picks and shovels. And the same logic applies here. Everyone's watching NVIDIA. Fewer people are watching the companies that NVIDIA rely on to even exist. Let me zoom out here for a second and let's get back to gold. Every time gold has shifted between two major economies, the same thing has happened at the industry level. Not just currencies changing, not just trade deals, entire industries restructured. Gold moved from Britain to America. British textiles and shipbuilding got replaced by American steel, American cars, and eventually even tech. And around 126 years ago, US manufacturing was higher than both Britain, France, and Germany combined. Gold moved after the Plaza Accord. Japan produced Toyota, Sony, and Nintendo, and chip dominance that lasted 20 years. The most important thing here, gold is now moving from the US to China, and the industries emerging, EVs, AI, semiconductors, consumer tech, drones, robotics. These aren't niche markets. They're the foundation of the next global economy. The difference this time, scale. China's economy is roughly 5 times larger than Japan's economy in the 1980s. BYD went from a nobody to 4.6 million vehicles sold in just a few years. Huawei, they rebuilt its entire tech stack while under high pressure. Active sanctions. The pattern is the same, the speed is different. So what does this mean for you? 3 takeaways. First, watch the direction, not the headlines. Headlines say trade war. The delegation, they're talking integration. Honda didn't decouple themselves from America in the 1980s. They integrated, embedded itself deeper. Chinese companies are doing the same exact thing now across Asia, across Europe. And the American tech companies, they're fighting to stay connected to China, not to separate from it. That's what Jensen Huang, flying to Alaska to catch a plane, is telling you. Secondly, the obvious names in the market aren't always the best investments. When Japan's tech boom happened, the smartest money wasn't just in Sony stock. It was in the component markets, the equipment suppliers, the companies that nobody was talking about but that Sony was dependent on. Same principle now. Everyone knows Nvidia. Fewer people are looking at the companies that Nvidia cannot function without. Third, follow the pressure. Every company that I talked about today, Toyota, Sony, Huawei, BYD, they became world-class companies not because of the lack of economic pressure, but because of economic pressure. Sanctions, tariffs, currency shocks, these don't destroy strong companies. They force them to innovate. If you want to find the next generation of dominant companies, look where the pressure is being applied right now. And just so it's crystal what this delegation was all about, all those CEOs flying to China, let me break it down. Jensen Huang wants to sell AI chips to China. Billions in revenue sitting behind closed doors in China. Tim Cook needs China because that's where most iPhones are being assembled. It's also Apple's second biggest market. Elon Musk, he wants deeper access to the Chinese EV market. And his Shanghai factory is already one of his most profitable factories. Profitable operations even. Larry Fink, he wants his BlackRock to manage Chinese assets. Biggest asset manager in the world, biggest untapped market. Cristiano Amon, he needs Qualcomm's China revenue back. Roughly half of their global sales come from there. And then we have Micron's Sanjay. He of course wants to get back into Chinese infrastructure projects after being banned in 2023. And the Visa and MasterCard CEOs, they of course want every transaction in a more connected US and China economy. Big revenue stream there. Nobody's flying to Beijing for a handshake. Every person on that plane had a specific number that they were trying to unlock. And even if half of them get what they actually came for, the ripple effects through tech, EVs, chips, and financial infrastructure are enormous. So in the 1980s, one economic shift gave us Sony, Toyota, Nintendo, companies that went from underestimated to dominating markets globally. The same pattern is playing out again, but bigger and faster. The goal is moving, the CEOs are positioning, and the factories and labs, they're being built. Credit to Andre Jick for the macro side of this story. Go watch his video. My angle, the industry level, what actually happens on the ground when a power shift like this one plays out. Because spotting the pattern is how you position yourself before everyone catches up. If this kind of thinking is useful to you, subscribe, and I'll see you in the next one. Ciao.